Welcome to Deep Into Finance family. We appreciate you being here with us. Give us a like and subscribe to our channel. Share with your friends and family and stay up to date to our future videos. Investing in gold and silver has been a popular strategy for centuries, and with good reason. These precious metals have long been valued for their rarity, beauty, and durability. They have also historically been a store of value, a hedge against inflation, and a safe haven during times of economic uncertainty. In this article, we will discuss the benefits and risks of investing in gold and silver, as well as different ways to invest in these precious metals. Benefits of investing in gold and silver. One of the primary benefits of investing in gold and silver is their intrinsic value. Unlike paper currencies or stocks, gold and silver are tangible assets that have been valued for centuries. This means that they are not subject to the same risks as other forms of investment, such as inflation, deflation, or the stock market. Another benefit of investing in gold and silver is their historical performance. Over the long term, gold and silver have generally performed well, and have often outperformed other forms of investment during periods of economic uncertainty. For example, during the Great Recession of 2008 to 2009, gold prices soared as investors sought safe haven investments. Similarly, during the pandemic, both gold and silver prices increased as investors sought refuge from the volatile stock market. Gold and silver can also provide diversification benefits for a portfolio, because they are not correlated with other assets, such as stocks or bonds. They can help reduce overall portfolio risk. This can be especially important during times of economic uncertainty, when other investments may be subject to significant losses. Risks of investing in gold and silver. Despite their benefits, investing in gold and silver does come with some risks. One of the primary risks is price volatility. Gold and silver prices can be highly volatile and can be affected by a variety of factors, such as changes in interest rates, geopolitical events, or changes in supply and demand. Another risk of investing in gold and silver is liquidity. While these precious metals are traded on major exchanges around the world, it can be difficult to quickly sell large amounts of gold or silver if needed. This can be especially problematic for investors who need to liquidate their holdings quickly during times of economic uncertainty. Investing in gold and silver comes with storage and insurance costs. Because these metals are physical assets, they must be stored somewhere safe and secure. This can be expensive, especially for large amounts of gold or silver. In addition, investors must also insure their holdings, which can also add to the overall cost of the investment. Ways to invest in gold and silver. There are several ways to invest in gold and silver, each with its own benefits and drawbacks. Some of the most common ways to invest in these precious metals include physical gold and silver. Investors can buy physical gold and silver in the form of coins, bars, or other bullion products. This can be a good option for investors who want to own the physical metal, or who want to have direct control over their investment. However, this method of investing can be expensive, as investors must pay for storage, insurance, and other costs associated with owning physical metals. Exchange-traded funds ETFs. Gold and silver ETFs are investment funds that are traded on major exchanges and are designed to track the price of these metals. ETFs are a convenient way to invest in gold and silver, as they can be bought and sold like stocks, and are generally more liquid than physical metals. However, ETFs come with their own risks, such as price volatility and management fees. Mining stocks. Investors can also invest in gold and silver mining stocks, which are shares of companies that produce these metals. This can be a good option for investors who want exposure to the gold and silver markets, but who don't want to own physical metals or invest in ETFs. Mining stocks can provide potentially high returns. But they also come with risks, such as operational and financial risks of the mining company. Investors must also consider the overall health of the mining industry, as well as changes in supply and demand for the metals, futures and options. Investors can also trade gold and silver futures and options contracts, which allow them to speculate on the future price of the metals. This can be a high-risk, high-reward strategy, and is generally best suited for experienced traders who can handle the volatility and complexity of these investments. Numismatic coins. Numismatic coins are rare or historical coins that have a collector's value in addition to their precious metal value. Investing in these coins can be a good option for collectors who want to own a piece of history, but it is not generally recommended for investors who are primarily interested in the metal's intrinsic value. Tips for investing in gold and silver. Regardless of how you choose to invest in gold and silver, there are a few tips that can help you make smart investment decisions. These include: do your research. Before investing in any asset, it is important to understand the risks and potential rewards. Take the time to learn about the gold and silver markets, and consider consulting with a financial advisor or other professional. Diversify your portfolio. While gold and silver can provide diversification benefits, it is important to not put all your eggs in one basket. Consider investing in a variety of assets, such as stocks, bonds, and real estate. In addition to gold and silver, consider your time horizon. Investing in gold and silver can be a long-term strategy, but it is important to consider your investment goals and time horizon. If you need access to your funds in the near future, investing in physical metals or futures contracts may not be the best option. Keep an eye on the markets. Gold and silver prices can be highly volatile, so it is important to monitor the markets regularly. Stay up to date on global economic and geopolitical events that could impact the metals prices. Investing in gold and silver can be a smart strategy for investors who are looking for a store of value, a hedge against inflation, or a safe haven during times of economic uncertainty. However, it is important to understand the risks and potential rewards, and to choose a method of investment that aligns with your investment goals and time horizon. By doing your research and diversifying your portfolio, you can make smart investment decisions that can help you achieve your financial goals. It is also important to consider the tax implications of investing in gold and silver. Different methods of investment may be subject to different tax rules, so it is important to consult with a tax professional to understand how your investments will be taxed. Another important factor to consider when investing in gold and silver is the role of supply and demand. The availability of gold and silver can impact their prices, as can changes in global economic conditions and geopolitical events. For example, if there is a significant increase in demand for gold and silver in China or India, this can lead to a rise in prices. Similarly, if there is a global economic downturn, investors may turn to gold and silver as a safe haven, leading to a rise in prices. Investors must also consider the impact of mining on the environment and the social and ethical implications of investing in mining companies. Some investors may choose to focus on investing in companies that prioritize sustainability and social responsibility, while others may choose to avoid mining investments altogether. In addition to the risks associated with investing in gold and silver, there are also potential benefits. For example, gold and silver can provide diversification benefits to a portfolio, as they are not highly correlated with other asset classes, such as stocks and bonds. They can also provide a hedge against inflation, as the metals tend to hold their value in times of rising prices. Ultimately, the decision to invest in gold and silver will depend on an investor's individual goals, risk tolerance, and investment strategy. It is important to carefully consider the risks and potential rewards. and to choose an investment method that aligns with your investment goals and time horizon. With the right approach, investing in gold and silver can be a valuable addition to a well-diversified portfolio.